Wednesday. Happy day after election. Let's get started for the final hour. It is 3 o'clock on the 6th. So, pretty interesting day. Very active in the portfolio. Managed 129 trades today. Closed out a lot of trades on SPY, QQQ, IWM. Had a lot of trades hit for profit today. Taking a couple small losses on the butterfly spreads I put in on the SPY. Price just kept moving higher. So my 585 level was actually, tested earlier this morning around 10 a.m., but it didn't hold. We're trading up to 590 plus on the SPY, so that'll be a full 15-cent loss. No big deal. But all in all, I mean, day looks pretty darn good. Up $33,000, fresh highs in the overall portfolio. I had some interesting facts to share. So I mentioned the Telegram. Did Trump actually win, or did the Democrats lose? And let me throw some facts at you here. Let me go to. We have voter turnout, presidential election popular vote, Democrat versus Republican. This was the same type of voter turnout we saw back in 2016 and 2012. 2020 was a much higher turnout. And you could argue that was the, not Trump vote. It was not that people loved Biden, but it was kind of a not Trump vote in 2020. That was also during COVID. But the voter turnout was significantly higher in both sides, to the tune, I think, in millions. Almost 75 million turned out in 2020 for Republicans, and about 80 plus million turned out in Democrat. And then this year, Democratic turnout was around 65 million, 66 million. Republican turnout around 71 million. So that was a big factor. Here's another interesting stat. Trump received approximately 3 million votes less in 2024 than he did back in 2020. Even though he lost the election in 2020, he still had 3 million less votes in this election. So Harris received approximately 13 million less votes than Biden did in 2020. The Democrats didn't come out to vote for Harris, plain and simple. So, like I said, Trump wins, but it really was just a terrible turnout for the Democrats, and back to the 2012, 2016 turnout levels. So it looks like America's not really voting. You got Democrats voting, you got Republicans voting, but America's not really voting. And I can totally understand why, because politics are exhausting. So anyway, thought that was interesting. I did add a trade in gold today. Basically, I'm long-term on gold, and here's a position I put in for my Pulver alerts. I went out to January of 2026, which is a long ways. But I think if we're going to see higher gold, I might as well start generating some income trades on these pullbacks instead of having to time this perfectly well where, I think gold's going to rip off this next 30 to 45 to 60 days. I could care less. I'm looking at I think gold's going to be higher in the next year. SPY just hit another profit. Oh boy. Which one was that? Hang on a second. I just saw one close. 306, November 29th. I got to update my tracker here. So this is another waterfall income that just hit profit. 583 and 582. 583 and 582. Let me find that here. So that was a 24 updating. Okay, so that was a 583 by 582. Updating my doc here. There we go. Okay, partial fills on the Qs. I'm getting some more trades closing up on my waterfall income. So we got another one, December 20th, 493. 493, 492. Sorry, I just got to track. I got to track this trade down. That was a partial close. Here we go. So the 493 by 492. Closing out there. Okay, good. Yep. Got it. Okay, so let me switch gears to the charts here. Go back to the chat. How's everybody doing today? Daily profit play grabbed a little win, even though we had a slight melt up. I know some traders took some winners today. I saw that in Discord. Let me see what I show here in the chat. Options chat. Mark's got 5 out, 5 winners on the day. Close out 5 so far, 2 running end of the day. Still waiting for one to close, says TJ. 3 p.m. wide trade still in place. Got it. Okay. So we are still kind of melting up higher in the SPY right now. If I go to, here's SPX, had a nice little opening range breakout late in the day around 12:45, still pushing a little bit higher. SPY, same thing, opening range breakout around 12:45, 1 p.m., going slightly higher. Gamma level and liquidity level that I see for tomorrow, 592. I mean, heck, it might even hit it for today. I'm seeing a record revisiting of inflows. Where U.S. ETFs I think topped like $10 trillion of inflows, which is insane. I saw some firm out there updated their profit target on the S&P from 6,600 to 7,000 by the end of the year. That would be that'd be a wild rip. If we go up to, I mean, I would think right now we're closing in on 6,000, right? So let me extend this out a little bit. Settings, style, extend right. There we go. There. Extend right. Oops. There. Okay. So 59.27. And we had talked about this since last week when Graham and I did the final hour. He joined me last week on Thursday, I believe. Took a couple earnings plays. He had mentioned the little election phenomenon that the day after election, Wednesday, the close of the S&P kind of dictates the near-term direction. So I'm as curious as everyone else. I mean, that was a massive gap to the upside. Plus, it's closing green on the day. I'm curious if we end up going higher. We do have FOMC tomorrow, so I'm not saying that we can't go higher. I mean, if honestly it looks like everything is just looking good for melt up, higher highs are likely the case. I just don't know if my technicals here that I have on my chart, is this resistance gonna matter? Like if we run up into 6,000 plus, I mean, for me to look at this and say like, oh, I think we're overbought. I mean, we're not. And in any case, if we go higher and pause, I mean, I think the easiest way to think about this market is this. Okay, if price isn't showing you any sign of reversal, there's no reversal, right? If price isn't showing any type of confirmed bearishness, there's no bearishness. And the election, getting the election out of the way gives the market the chance to just pump in. I'm sure there were some traders on the sidelines which put in the big push today. So I mean, you just have like heavy amounts of inflows today, hitting all-time highs yet again on the S&P. The Nasdaq is officially up to all-time highs as well. So I mean, that's a heck of a turn since yesterday's close. Nasdaq is up 2.62%. And all we had was a 50-period moving average. And so that is part of the reason that the waterfall income strategy worked out so well. We had this nice push to the upside. We had trades that were going out to end of November, into December, even into January, and a lot of those trades closed out today. So, yep. The gold trade, yeah, I put that in my Pulver alert section. I just did a trade on GLD. I was looking at GC. I was looking for a futures trade on gold. It just cost me a little bit more to do it. So I was like, GLD seems a little bit better. Plus, I don't mind owning shares of GLD as opposed to getting assigned on something futures, which I don't want. So what I could do, let me actually check something here on GC. So GC, and on that note, let me see something here on SLV. I might as well kind of make the same position here on SLV. We had a nice pullback on SLV. I'm going to do the same thing here for SLV. So SLV, Let me see how far out I can go for SLV. I went to January 2026. I'll do the same thing. I'm going to take an at the money, so a 28 by 27, get 45 cents a contract. Looking for some income. Let me see what I mean, 9 contracts isn't too bad. Now there is a chance that if silver falls aggressively, I could get a sign, and I'm not going to take 900 shares. I'm already in for like 300 to 600 shares on most of my SLV positions. But as far as the income trade goes, going out for a while and trying to collect this income over the next 12 months. I mean, to me, this seems pretty straightforward. So even if I get a partial profit here, go after a 50% take profit, still $200 in income. I'm gonna go ahead and take this trade in SLV right now. So 45 cents credit. See what this looks like here. Hopefully it will get me filled. Cool. So that got filled at 45 cents. Okay. I think this one already got filled. Nope. Okay, so 151. There we go. Okay, so I'm going to add that in to my Pulver Alert section. That's a new trade on SLV. Just had another position close out on QQQ. All right, so GLD. SLV, I like silver, long-term bullish. Yep, so all my trades are in QQQ are closing up, which is nice. All right, so what I did on SLV is I sold a 28 and a 27. So I sold the 28 put, bought the 27 put, collected 45 cents credit. And that trade is in. So right here, okay, and I'm going to draw the chart out similar to what I'm doing on GLD. There we go. Okay, so basically what I'm doing is I'm using options to dollar cost average in. Oh my gosh, you are going up to freaking 592, you turd. All right, I want to put a butterfly spread in on 592 today. That would have been freaking sweet. I'm curious what it's trading for, actually. I'm just going to look at it. It's probably trading for a couple of bucks. If I had a 6 expiration call fly with a 592, yeah, right now it's trading for $1. That would have been something that cost about 10 to 15 cents. Now it's trading for $1. And that would have been the plan. Anyway, I didn't take the trade. I was just curious. So, yep, we're ripping late in the day. We got the final 43 minutes. No big deal. All right. So, back to the thoughts on SLV GLD. So, I like the trades, and I'm thinking of longer term dollar cost averaging. That way, if silver, if silver pulls back more, finds this 200 moving average, and then goes higher, I could also create some additional bull put spreads here. I could put in some bull call spreads here, but this is still my profit target. Profit target 1 for me is $33 on SLV, and profit target 2 is $44 on SLV. So any dips and pullbacks, I'm pretty interested in, continuing to add exposure and add to SLV and GLD. Are you holding those? Probably not. Realistically, if I get 45 cents a contract and they're trading for 20 cents or less or 15 cents or less, I'll probably take the profit. So if I closed out for, let's say, 15 cents, so that gives me a net 30 out of a 45, I'd get about 66% of the profit. I'd be pretty happy at 50%, to be honest. If 50% or better profit would be fine. Papa John says, got a sign on some SPX from yesterday. There's no assignment on SPX. Check the commodity trades there, Phil, or who was asking? Yeah, check the commodity trade section. That's where I put the SLV and the GLD. Target on GLD, I mean higher. I mean if gold itself goes to 3,000, then GLD goes towards 300. Right? I mean there's it's not exactly 1/10. I mean 2664 on XAU should be about 266 on GLD, but we actually have a slight discrepancy on that pricing. So roughly speaking, if gold heads to 3,000, then GLD would probably be heading towards like 280 to 300. Bitcoin, nice strong showing today, up to some fresh all-time highs. This is the other big potential $1 trillion question, which I think, what is a Bitcoin market cap? Crypto market cap. So right now, market cap is 1.5 trillion on Bitcoin. And between Bitcoin and Ethereum, $1.824 trillion. We're closing above all-time highs with a nice convincing daily candle. If we are still going, pullbacks or pullbacks or pullbacks, I mean, you got to wonder if this momentum is now getting some traction. So is 100K in the works for this year? It's possible. Am I crazy bullish? I mean, I'm just holding. So this whole window has been an accumulation window for me. So now that we're sitting here at these highs, I mean, I'm letting trades just work out. I wish I could trade more options, but I don't. So I mean, even on Bitcoin futures, the reason I'm not super excited about Bitcoin futures is because the spreads are, number one, I only can go out to like January, and number two, I've got $1,000 wide strikes. So even if I did, I'm curious. I want to price this out just for fun. So if I did, let's say, a $50,000 sell position, and I created a bear put. Let's do like a 55 and 54. I mean, I get $7,000 of profit. Actually, I take that back. Let me see what this would cost. So let's see here. 510 at a 5 multiplier would be a $2,500 profit, but that buying power is outrageous. So there's no way I'm taking the trade. But even let's just do a credit spread. If I said, okay, Bitcoin's going higher, so I sell the 77,000 and I buy the 76,000, I risk 23.25 to make 26.75. Is that a good trade? I mean, no, not by a percentage standpoint. I'm not going to risk 1% on this. So anyway, I want to trade more on Bitcoin, but the way I've been able to trade is really just by dollar cost averaging into these ETFs. So IBIT up to some fresh highs, FBTC up to some fresh highs. Those are the best looking correlated currency, or the best looking correlations to Bitcoin. BITO is looking better, but still with that crazy dividend at 65%, the repricing on this one in order to accommodate that dividend is really tough. I mean, you see a stock like this, or a ticker like this, Bitcoin's at all-time highs. Why is BITO not moving? Because that giant dividend that has to foresees recalculations, recalibrations. So I'm still long on BITO because that's the only one you can trade options on right now. We are still waiting for the OCC and CFTC to approve options on IBIT and maybe others. But anyway, I mean, if you've got exposure, you're happy. It's pretty simple. MicroStrategy, big wick low on the day. I'm hoping we get some pullbacks on MicroStrategy. If not, this thing's off and running, but I'm not chasing it. Got a lot of income trades down here. Ethereum looking much better today. If we get to 2,800 or higher, I do have a credit spread out to the end of the year above $60. Copper, wow, big drop on copper. So gold, silver, copper, all dropping really hard. Let's take a look at the China stocks for a moment. Alibaba sideways on the day, but gapped lower. Baidu gapped lower. FXI gapped lower. KWeb gapped lower, and JD gapped lower. So I still keep reading that China is talking about staying on pace for a stimulus and adding something to stabilize, the capital markets, stabilize real estate. Saying and doing are two different things. So I think if they actually throw in more stimulus and lift animal spirits, and we'll see prices reflect that. I have said this the last couple of weeks. I was wondering if a Trump victory would actually hurt China in the near term, simply because of the threat of trade war / tariffs, and that could still be the case. So it might take another heavy round of stimulus from China to kind of lift these stocks back up again. Meanwhile, I'll just kind of continue to work my cost basis down in some and try to trade aggressively. Okay, well, if you've been assigned, then tell me on your account, are you sitting on shares of SPX? Because you're probably not. So they're exercised, but it's still a cash settled instrument. So there's no way you're going to get assigned an SPX. So it could be exercised, but that's to close things out and neutralize your position. It's a cash settled instrument. So you can let these go all the way to close, and there's no actual assignment as far as you holding that in your account long or short the shares, because it's an index. So you're not going to hold anything long or short on SPX. With the waterfall closing, are we looking to open more soon? I mean, yeah, I'll just do the same routine like I do usually every Monday. So the nice thing is we still have other trades to go. So Papa John, look at your account. Look at your account on SPX. If you see SPX, do you have any owned shares of SPX? Because I'm 99% certain you don't. So like this right here, like this isn't in the money. So I might get the email that says I was exercised or my option was exercised, but I'm not going to sit and hold any SPX trades. So, but yeah, you can call. You can call Tasty. They'll always walk you through things. All right. And to Mark's question or William's question, yeah, we'll just stick to the same routine with waterfall income. We'll grab some more opportunities on Monday, hopefully. And as we're sitting here near these highs, we still have some trades that are still running, still looking to close out. This is good. And so even if we have a another trade in here that goes higher, well, there's profit to be had. If it pulls back a little bit, I might still work some ownership positions. That's one thing I want to do with SPY and QQQ is I don't mind having the ownership. I'm just a little concerned that this gap ultimately gets filled, or at least an attempt to fill it. We don't look. How many times have we seen a big gap that doesn't get closed? And here's a good example. Okay, that's a pretty noticeable island gap right there, and price came back to it. Okay, here's a pretty noticeable gap right here. Price came back to it. Here's a noticeable gap here and a gap here. Price came and filled this one and very close to touching that one. So to look at today's price action and think like, oh, we're not going to fill that gap, that's nonsense. I feel like we are definitely going to use this gap in some capacity to either have price come back and find resistance to become support again, or even fill the gap and then rebuild some support positions and find some efficiency and structure. So I wouldn't be surprised if we fill it. But it's not a huge, point wise, it's what, maybe 15, 16 points. So, to fill the gap, we'd have to have a fall of around 2.5%. That's not bad. 2.5% is nothing, right? Okay. Dollar index. Yep. So the debate on the dollar index has been, what do we do? Okay. I am intentionally out of the dollar pairs right now because the only thing I like is dollar Swiss, and I'm long, and that's still heading higher, so that's nice. And dollar CAD. which is heading higher, but still hasn't gotten me filled yet on my 4025 position. So I'll still hold on to my dollar Swiss long. My profit target is 9,200. All my other currency pairs, Aussie dollar. Look at the Aussie dollar. Aussie dollar has a lot of action here. It doesn't look nearly the same as the DXY. So if the dollar gets stronger, Aussie dollar comes back into a very attractive level that I'm still interested in buying. I just think right now we have major support and we have resistance and we're still in the middle with a bunch of noise. So I'm not interested in Aussie dollar. I'm interested in Aussie dollar down here. That's where I'm more willing to buy. Okay, we go to New Zealand dollar. Okay, same thing. New Zealand dollar is actually pressing down to some fresh lows. I have some pending orders on New Zealand dollar at 58.65, 57.30, and 56.05. I'm looking to buy some pretty strong support that goes back to 2022. That's it. Euro dollar, it's in the middle of a range. What am I doing on euro dollar? Nothing. Okay, so that's a huge candle on the day. Now, if we look at this from a smaller time frame, okay, the 1 hour chart's not super inefficient, but there are a couple pockets here that I'd be watching closely. Let me zoom in. I would say anything in this vicinity here, that if I can buy the euro dollar low enough, I wouldn't mind taking it back up to find some support. So right now, do I buy the euro dollar? No, not even close. But if we come into 106 or 105, 106 and 105 levels, find some multi-year support right in here, right in here. If it goes back up and finds the halfway point, easy profit, tight stop loss, right? If it goes up all the way to range highs, that's a huge profit, and you're just trying to eliminate risk along the way. So look, I'm going to let the dollar do its thing. If the dollar wants to keep ripping right now, that's fine. Is it weird to see the dollar going up in strength and also showing higher stocks? Yeah, it's weird. But does it happen? Yeah, it can happen. Right? All sorts of wild stuff can happen. But that's where I'm at on the dollar, John. So look at US dollar here. So I'd mark this yellow box with all the noise and indecision. If you look left on this US dollar chart, there's just a big range. So strong support and resistance. So somewhere in this area would be my resistance area right in here. Okay. So if the dollar wants to get stronger, fine. I mean, this is no different than the same rip we saw back here in 2023. If it starts from a low and goes all the way back up here, that's fine. So it goes up here, gets a little messy, rips on the election, maybe has a bull flag and stays bullish. Well, at this point, there's still a big fat pocket up here that if we find, I think the market's satisfied with that efficiency, and then we see what's left to the downside. So don't call the top on the dollar. Let it get crazy exhausted. Let it come to these really attractive resistance levels, or in some case like Aussie dollar or New Zealand dollar, euro dollar, let it come to these attractive support levels. Okay. Yeah, but the interest rate scenario is no different just because everyone's cutting rates right now. You know, the Fed's going to cut, but their path right now is getting curbed pretty quickly. So, I mean, the Fed went 50 basis points, 25 is expected for November, December, and then going into 2025, it's basically about 0.5%. So for the entire year of 2025, the market's only anticipating about another 50 basis points of cuts. Even though we just did a very aggressive 0.5, and then tomorrow's likely another 0.25, and then December's another 0.25. So we go 50, 25, 25, and then for the rest of 2025, we're only looking at maybe 1 or 2 cuts. And I don't know when that is. You know, maybe it's Q1, maybe it's a January, maybe it's a March, maybe they pause. We'll see what inflation data gives us. Okay. But the reason I don't think that the interest rate situation is going to turn the dollar is because every central bank's doing the same thing. If you go to look at your central bank rates right now, okay, Australia, they're still at 4.35. Canada has cut from 5% down to 3.75. Eurozone has cut from 4.25 or 4.5 to 3.25. They've cut. New Zealand, obviously, the Bank of Japan has raised rates to around that 25 basis points move. What else? Yeah. So at Bank of England tomorrow morning, they're likely going to cut down 25 basis points as well. So if you have all of the central banks cutting rates, it doesn't necessarily make another currency more attractive than the dollar right now. So I mean, I think from the bigger picture, it's like most of these central banks are at least in a pause cycle or a cutting cycle as they're continuing to kind of deal with inflation, just like we are. We're just taking an interesting approach, which is we're cutting heavy up front, and then we're going to see if the data and the restrictive nature of where we're at right now is going to stay. I don't know if it will. I mean, I've got my concerns. I keep referencing this, but trueflation is a big concern. Oops, trueflation. This to me is a concern to see this thing. If you go back to max here, okay, this puts a little bit in perspective, but when you go back to the last 6 months or the last year, this is my biggest concern. We've had this nice steady trend to the downside, and all of a sudden it completely reversed. So what this is showing us right now is that the last 12 months of inflation has basically gone unchanged. Isn't that crazy? Like literally last December to April to now, you have an unchanged inflation reading. So that trend that everyone was all excited about for justified cuts from the Fed, I think this is pivoting the wrong way. And so as our inflation data comes in the next couple of weeks, we're still going to have another round of CPI, another round of PPI, and I don't think it shows if you go to the calendar. I don't know. Let's go next week. So next week on Wednesday we have CPI for the US on Wednesday the 13th. There's no forecast right now. Let me go to the Bloomberg calendar and see if there's one for next week. So if I go next week, let's go. There we go. Let's go to Wednesday. So they also don't show a forecast, unfortunately. So it'll probably pop up on Sunday or Monday. But I'm curious, like, our previous CPI print year over year was 2.4. It is unlikely going lower. So I think I saw from the Fed this week they're already forecasting like a 2.6, which means we're going the wrong direction as far as the inflation battle goes. Which is also why the Fed may be, and they might talk about this tomorrow during the press conference. They might be just data dependent. We might be making sure that inflation is a top priority and employment's a top, blah blah blah. Same thing. Powell's script is very consistent. But if we're trending aggressively in the wrong direction, that can't be a good thing. So look, just don't be surprised if something breaks. I'm not saying it's now until the end of the year. I'm just saying like something's going to break. We can't keep running at these all-time highs with gold outperforming the indexes and silver outperforming the indexes and Bitcoin being its little risk-on, risk-off beast. Meanwhile, you got the dollar getting stronger. You got yields that are ripping and bonds that are crashing. Like something's going to give. Like the bond market, if there's too much pressure in the bond market and the yields continue to rally, they will put a lot of strain in the equities market and it will choke growth. Like think about it. Nobody's really talking about it now. Nobody's thinking about it now. But if this 10-year yield continues to go higher, this will choke off all forms of growth. It's up 3.7% today. Okay. So and we're talking like any debt restructuring, anything like 5, 10, 15, 20-year financing, it's not good to see those yields rising. And when that starts to inhibit growth, the equities market will take notice and we'll start to see prices roll over. So it's not happening right now, but again, don't be surprised if this continues to rally and we continue to get out of this 10 and 2-year disinversion and we see the 10-year and the 3-month get disinverted finally. I think that has some typical, sour effects for equities. So I'm just saying, it's nice to see all-time highs, right? I'm right there with you. But if something ultimately breaks, I do think that the bond market, it is a bunch of sophisticated investors, and I think the bond market and the yields are telling us something. So It'll matter when it does, right? It'll matter when it's when price is starting to give us confirmation. So I'll continue to chew up some small hedges here and there. Nothing crazy. I mean, I don't know if I need something by the end of the year, but it might be in my best interest to do so. In fact, if I look at something right now on SPX, trading here at 59.26, and maybe if I wanted to do something to hedge out to the end of the year, let me check on something here. If I do MES. So MES, if I were to hedge, I'm just trying to make something so I don't want it to cost a bunch. So if I were to trade out to the end of the year on MES, what is this going to cost me? So we're trading at 59.56 right now. And if I were to buy a 6,000 put, it's going to be about a $550 loss. So am I willing to risk that? Sure. But if price falls, okay, let's say that we fall and we fill this gap. Well, that's probably going to pay some profit. So even that might help a little bit. So I don't mind throwing something like that out there, but let's see. Yeah, I think I'm going to do that actually. Let me move this alert. Look for a gap fill. 57.85. I'm going to go into ES and MES. So we're trading up towards right here. So I'm still long. These puts are out there to still hedge. Let's see. I mean, the futures market actually looks a little healthier just because we had a pullback into the 50 period. Now it's up higher. I mean, sometimes when you're looking at the technicals, the futures market is an easier read, right? I mean, yes, they still fill gaps, but you just get like a more pure read from that, 23-hour market. So this doesn't look nearly as toppy when it's like, yeah, we just pulled back to the 50 and then ripped higher. That's all. But we'll see. Anything overbought? I mean, a $500 risk isn't the end of the world. I could go $50 lower. It's not going to save me a ton of profit. So let me see let me look at like exactly $500. So 495. I mean, 6,000 is a good round number. Anyway, I'll think about that. I can place that hedge, anytime with futures, which is nice. Cautiously bullish. That's correct. Yep. Okay. Those butterflies there, Phil, probably not going to pay. Those butterflies probably aren't doing anything for the next 20 minutes. So I'll wait on those. The expiration was today, so unlikely those get paid for anything. We'd have to see the SPY drop probably $4 to $5 now in the next 20 minutes for those to pay, but otherwise it's just a small debit that I'll take the 15-cent loss. Okay, I can get rid of. I think I closed out my longs earlier, so let me check my ESA. I think they're all hedges right now. So this is still a broken wing butterfly, and actually I'm totally at a loss right now. I'm still up about $780 in hedges, which isn't bad. Some of them are like out of the money 111s, and some of them are ratio spreads and credit spreads. And I've got a couple hedges. I was hoping that this one would actually pay profit this week. So I have an expiration that's a broken wing butterfly. If the ES feed gets down to 58.90, that's a pin price. I need it to drop about 60 to 70 points today or tomorrow. Well, I should say tomorrow or Friday. And if it does that, then that's actually a profit trap. So there's current price where this little flag is. If price drops at all through the Fed tomorrow, there is potentially my profit trap that I would be sitting on through Friday. But now that I'm looking at price right here, we could just be going higher. So I don't know. I'm not sure if the Fed is going to say something tomorrow to disappoint the market, or the Fed's like, let's keep our freaking mouth shut because nobody's complaining when we're at all-time highs. And maybe that's what the Fed's trying to do, is just keep it so vanilla and so much the same that it's like they don't say anything that shocks the market, rattles the market, and everyone can just be celebrating all-time highs. So I'm guessing the Fed is not going to rock the boat. Even though the reality is things under the surface, like the 10-year yield ripping the way that it has been, doing the exact opposite of what the Fed was wanting to see, which was trying to create some cuts and let borrowing costs get a little bit more affordable. And it's done the exact opposite. Things have gone up, right? So we'll see. And if the 10-year turns south, then great. I hope it does. I hope it turns south in a heartbeat. But it hasn't happened yet. Okay, so just like Harry said, they're cautiously bullish. That is exactly right. That is exactly right. So if I take a look at this, I mean, I'd like to see a gap fill, which is why I would almost consider, let's go to QQQ. I mean, QQQ back to highs. I could still see a gap fill here. This would be something near term. So if I were to go after, I mean, I guess the question is, are we going to gap fill or are we going to melt up to 600? That's what I don't know. I mean, do we hit 600 first and then we gap fill? Or do we gap fill and then have another rally towards 600? I mean, that would help if I knew it, but I don't. So we'll see. But if I go out to the end of December, so like a December 31st expiration, and this goes up and then falls, I mean, I could turn that into some profit. We got the Fed tomorrow. I don't know if they're going to say anything super disappointing. So I'm trying to think. If I do a bear put spread, I'm going to have to wait towards expiration, which I don't necessarily want to do. I'm trying to think. Maybe the better play would be this. If I go, let's go MES. Maybe I just give myself some time to make it a little bit cheaper. So if I went to 58, let me go 5,800. So if I buy, oops, come on. So if I buy January 31st, I buy a 6,000 and I sell a 5,800. Well, now my max risk is $250 for a max profit of $750. It's way cheaper. I suppose I could tighten up my trade a little bit there. So 320. 5,650, 5,600. And that's not too bad. 5,500. Okay, so I would cap my profit potential, risking $400. I think I'm going to take this trade. So I'd be buying the 6,000 long put and then selling a 5,500. Now, my max profit here would be capped around $2,100. I don't necessarily need to make $2,100 because I don't want to wait all the way to expiration. But even if I were able, if I could close this out for, let's say $1,000 profit, that's better than nothing. So I think I'm going to take this trade as a small hedge. See if I get filled at like 81.50 or less. So this will be a small hedge. Okay, between I mean, this would be fine. 346, 81.50. All right, just got filled. What the heck? There we go. Okay. So now take the same trade right there. 732,111. Okay. So I am doing this. This is going to be in the futures trade for, so futures trades, MES. I'm doing a 12/31 expiration. Buy the 6,000 put. sell the 5,500 put, 81.50 debit. And my max profit would be around 500 bucks. So this is a $400 max risk per contract and a $2,000 max profit. This is an index hedge in case the I'll just say the election gap is filled. So if price falls to fill the election gap, look to protect profits. So this is not one that I'm going to hold. Okay. Ideally, 50% profit or better. Okay. So there, I'm looking to see if I take the trade. Looking to see if price goes down. Actually, I'll just highlight this here. So let me go highlighter. Okay, so maybe there to there. So it's a hedge. And looking to see if we just find some efficiency. Maybe the Fed has something to do with it. Maybe they don't. Maybe it's whatever. Maybe the rest of earnings season isn't that great. I have no idea. But I'm willing to sacrifice the $400 if I'm wrong. If it turns into $1,000+ as a hedge, that's fine. So I'm taking a stab at it. All right, so that just got posted in my futures trades for my Pulver alerts. Okay. Fed states that he never considered the stock market in his decisions. Okay. I mean, there's pressure. I mean, the reality is the stock market is the worst representative to the economy. And so like for you to be told that everything's fine, the economy's great because the stock market's at all-time highs, that's complete BS. Okay? The reason the stock market goes higher is because we're actually debasing the dollar and losing purchasing power. That's why the stock market's higher. If you compare the value of gold to the S&P, it's essentially a flat line. But you compare the debasing of the US dollar to the rise in equities, it's what's helping you keep pace with the debasing. So, yeah, I mean, the Fed can say whatever they want, but look, if the stock market is falling, what are they doing? They're taking action. If the stock market's ripping higher, they just keep their mouth shut. I mean, that's what I'm saying. Like something ultimately breaks. And I mentioned this. I did a video on TradingView this week. I think it was Monday night. And Monday night, I just said, I mean, for the last 6 years of trading, we've seen nothing but booms and busts. I mean, we've gone up, we crash, we go up, we crash, we go up, we crash. We've done this so many times in the last 6 years. It's insane. So, I mean, look, I'm right there with everyone else. All-time highs feel great. It's the easiest thing in the world to be a bull market genius and look like you're so smart. But I just want to make sure that if anything silly happens to the downside, I'm taking these small trades, small risks that hopefully pay 2, 3, 4, 5 to 1. So I'm going to take my chance at that. But to say the Fed doesn't consider it, I think that's baloney. I think they absolutely do. Because if the stock market is falling, guess who's active? The Fed. What are they doing? Probably cutting rates. Backpedaling. The Fed put is a real thing. There's been tons of manipulation because of the Fed. So, yeah, they can say whatever they want. But we'll see what they say tomorrow. There you go. Close out for a small loss there, Phil. 5 cents on the SPY. Okay. We're at 590. Yeah, I mean, I don't know if it's going to do anything here. I can look and see what it's trading for in these final few minutes. So SPY here, 1, 2, 3. I mean, it's showing for 2 cents. Like, it's not even, I mean, I could close it there, save myself 2 to 3 cents, but I'm just going to, let me see. Can I get it out for 5-cent credit? Replace. Can I save myself a couple of cents? Nope. 3 cents? Nope. 2 cents? Nope. So, yeah, it's just going to expire worthless. All right. So on that note, wrapping up here for the day. I mean, I don't know what else to say. Pretty interesting stuff. Crazy gap higher. But I thought it was interesting looking into the details of voting. It really wasn't this huge turnout. It was mostly that just people didn't show up to vote. Dems didn't show up like they did in 2020. Kamala Harris wasn't a candidate that Democrats were willing to vote for. Trump had a steady base, but it wasn't. It was actually lower than 2020, and it was right back in line with 2016. So it really wasn't like an American election. It was like Democrats and Republicans turned up to vote. So, like I said, I mean, you can argue forever you want, but it's not making a political point. I'm just saying the Democrats basically lost the election. Trump just had a steady base. So, but what's interesting is, did we officially have a sweep in the House and Congress? That's what I want to know. So we're showing here for the House, we've got 201 to 186. This is still to be determined, right? So if we have a red sweep where the Senate, which has already been determined, so we got 52 and 44 Republicans have the Senate, but if the House is still up for grabs, I mean the Democrats are behind. So if we have a Republican sweep with the House and Senate and president, then that's where more of the policy shift and the uncertainty that the market might be feeling in the near future could take place. I had said that, right? We talked about this election stuff. I'm like, well, if we don't have a decided victor right away and we have a sweep on one side or the other, that's probably the most uncertainty the market's going to have. And there are pieces of Trump's administration that will definitely be inflationary. There's trade war potentials. There's threats. It's not perfect. I mean, and when we have anywhere between $4 to $7 trillion worth of add-ons and adding to the debt, that's not good either. Even though we might do away with the Department of Education and we might make all sorts of crazy changes, I mean, I don't think our tax revenue is going to be that great. I think the problem is we spend too much freaking money. The government just spends too much money. So for every percent of GDP growth, I think we're debting ourselves like 1.5% to 2%. That's the new normal. And until that changes, we're just steering right into the iceberg that's sitting there to blow up the economy at some point. Not blow up the economy, but reset. There will be a reckoning at some point. There will be a reality check at some point. Yeah, I agree. I think above 5%, U.S. is in big trouble. I think above 5%, the U.S. is in trouble. 6%, it's catastrophic. So if the 10-year yield, I hope it doesn't. I'm closing on a house in April. You think I want to close at 6.5%, 7% on a mortgage? No, not even freaking close. I'd essentially be like overstretching just to say I have a house when it's like the first thing I'll be waiting for is a crisis so I can refi. That's not how you want to buy a house, So I hope this little rip we've seen, and then the Fed cuts, and maybe we're settling back in, that the 10-year can settle back into the low fours, and we'll see how overall financing looks in that area. But that's something to keep an eye on. Okay. All right. And Bitcoin futures. $77. You got it. So previous high 74,460. I mean, it is a very convincing rip on Bitcoin. So I think this is possibly my next big exciting trade, which I'm already in it. It's just to see if this is directionally gonna be proven right. If this becomes a real momentum getter to the upside, and we're having this conversation at 100 plus thousand. So I will say this: if we're blowing the lid off of Bitcoin and this thing's going to head higher, then the first thing I'm going to do is come to one of my workspaces here and go into, where is it? Harmonics. This one. It's not what I wanted. There we go. So here is the Dow. Okay, we're sitting near, and we're not there yet, but look at this. This is a weekly chart on the Dow. Let me go to the SPY. Okay, so do we have agreement or disagreement on momentum? We have lots and lots and lots of disagreement. So disagreement on momentum, hidden bearish divergence and the relative strength on a weekly time frame. But this can also take longer to actually hold, and then all of a sudden price is going to have to, show us that there's a bit of a glitch, or at least a flinch. So Qs, same thing here. We just hit all-time highs again today. Momentum on the weekly time frame does not agree with that, and we have hidden bearish divergence. So this is not calling a top. I'm just saying, like, I don't know how much higher we run without having some type of technical level that's going to matter. The Dow, same thing. So this one's a little bit more like testing overbought. The Russell had a big rip here. I mean, the Russell might still have some room to run just because we haven't hit all-time highs yet. But what I was going to say is Bitcoin, if I go to Bitcoin, okay, I don't love this. All this accumulation that's finally blowing the top off here. Now, we had a decent pullback where we had, these equal highs and we had a slightly lower high in momentum and hidden bearish divergence there. I mean, if Bitcoin, and this is what I'll look at, based on the price, if we're going up to 100K, I'm going to look to see, are we at overbought conditions with some divergence? Are we at momentum plays with divergence? Because the last time I was out of Bitcoin was when we retested these highs and there was disagreement that was really, really obvious. I will do the same thing in this go around. So if we stretch up to 100K, fine. But if we go to 100K and then we pull back, let me change this chart here. So if we go to 100K and then we pull back and then we go up to 100K and change, if that 100K plus mark and having a higher high is showing me lots of disagreement, I'm probably pulling off some profit and getting ready to reallocate at a better price. So I think there's room to run. I think that's pretty exciting. But once we get to 100K and we kind of check the box, then I'm going to start looking at the technicals and see, are we overbought with divergence? If so, making sure I'm protecting, I don't know, just wanting to at least protect and reallocate, take some profit, get it back into cash. And then I can always revisit the 3-5% allocation, maybe 10% allocation. So does not have to be complicated. All right, buddy. It's closing bell officially. I'll let you go for today. Thanks for being with me. Good stuff overall. I mean, look at this futures market today. I mean, this futures market was just on last night. So this was all yesterday. Let me see what today was. All night, this thing was just going nuts all night. So any active futures trader through the election was loving it. This morning, curious where that was this morning. That was like a fake out this morning. So there's my 9:30 candle. 9:30 candle, fake out, and work back up. Same thing here. 10:30. What a very noisy. That was a noisy NASDAQ futures this morning. Was that it? Yep. So my little 15-minute breakout. So lots of chop until around 12:30, and then we went higher. But all the futures run was happening overnight before we even got into the U.S. session this morning. Okay, and we're way above that VWAP right now. This is another little reality check that I wouldn't be surprised of. We, maybe melt up a little bit more, but we'll probably make our way towards that weekly VWAP at some point. So, I don't know, just be prepared for a pullback. That's all. A pullback in a dip, still offering up some opportunities. All right. That being said, enjoy the rest of the day, and I'll see you tomorrow. All right. Thanks. Bye.